Hello everyone, this is Spectre Trader with Semantics Trading with your daily report. So looking at the markets today, we did initially sell off on Daly's comments on 100 basis points. And then we did have a nice rally after Bullard, who was more generally hawkish, stated that 100 basis points wasn't likely. Perhaps he sees it more as a coin toss at the current moment, but I'm still thinking that we might want to rally to 4,000 on the ES before seeing longer term time frame sellers step in. If we take a look at the yield curve, as we are in the inversion territory, there's no doubt that the markets are pricing in the next recession. In the last 2 weeks, the 3-month yields have gone up 0.7%. They started the year at close to 0% and now yielding 2.4%. This means that the investors are very worried about the future of the economy, as they expect bonds to be more attractive than stocks in the future due to recession fears. We do see that bonds had a monster rally after the Fed had raised rates last time, and the market is ahead of the Fed and making adjustments. The bond market is signaling to the Fed that the rates are too high, and the inflation number is quite irrelevant in this context. With interest rates, all that matters is how they are trading. How they got there is quite irrelevant, and the bond market is deciding what data matters, and the people that are the bond traders who are wired into the screens with capital at risk, they are the arbiters of what matters. And we do see that the U.S. dollar has rallied massively, as you do need the U.S. dollars to buy treasuries. And as we take a look at the euro-dollar futures curve, the markets are starting to price in rate cuts for Q1 for next year. If you don't know already, the euro-dollar is a proxy for the Fed funds rate futures, where the traders bet on what they think the projections of the Fed policy will be. And mind you that they are highly informed due to their access to high levels of info, and that makes the market more efficient versus other markets, such as equities. And going into the details of yesterday's CPI number, we did see that goods prices have decelerated to year over year, but rose sharply last month. Services prices are now up 6.2%, which is largely driven by housing inflation. And in fact, housing alone contributed to 2.4 percentage points to inflation over the last 12 months. And we do have to note that the combination of rising risk-free rates and surging risk premiums being default spreads and equity risk premiums, is pushing up the corporate cost of capital and making doing business more expensive. Looking at the freight data provided by Cass Information Systems, freight shipments fell 4.1% sequentially in June and reversed all of May's gains. The freight industry does appear to be on the downside of the freight cycle during this back half of 2022. And in previous reports, we talked about the bullwhip effect. If you're not familiar with it, you could go back into the previous videos. But essentially, what the bullwhip effect is that retailers are not really able to accurately project the demand for their goods. So in turn, they tend to overorder or underorder, and that causes massive price swings due to unloading supply at massive discounts, or raising prices due to not enough supply for the demand. So we do see many retailers are chasing inventory through the pandemic, and they often pulling forward the merchandise ahead of normal buying patterns to avoid this supply chain bottlenecks that we've been having in the past 2 years. However, the trend has reversed course recently with a couple of retail heavyweights signaling that there is margin pressure and they're carrying too much stock or inventory that is out of season. So with this bullwhip effect, it's likely to drive inflation down, and we may see a sort of a deflationary effect on the current situation. And if you take a look really quick at crude oil, WTI crude has hit levels not since seen since April, and Brent is currently trading at February levels, which is erasing the post-invasion premium. But the supply is still short, and OPEC needs to pump crude at higher prices to keep it with demand. So I'm not quite sure if this saga is quite over yet, but we shall see. And that is it for today's report. I want to thank you all for watching. This is Spectre Trader signing out. And be sure to check out the link in the description if you're interested in our trading Discord. This is a premium community where we share ideas and promote an educational environment for those who are interested in the markets. But anyways, I hope to see you in the room, and I hope you all have a very nice day. Thank you.